Hello everyone, welcome back to Stock Trading and Analysis. My name is Ming Han and I am part of a group who love to watch the markets for trading and investing. This channel is dedicated to help traders and investors do better. We provide you with high quality tutorials, guides and insights that give you clarity in the world of trading and investing. Whether you're a beginner taking your first steps or a seasoned pro looking to refine your strategies, there's something here for you. To stay updated and be the first to access our valuable resources, hit that subscribe button now. By subscribing, you will be notified whenever we have new updates. Today, I will share with you two practical ways to use the Fibonacci Retracement tool. I used to draw support and resistance levels. I have hits and misses in my trades, more misses in fact. This caused me to doubt my key levels. I want to trade better, and trading off my support and resistance levels don't seem enough. My friend introduced me to the Fibonacci Retracement tool. Surprisingly, there were times when the Fibonacci levels coincide with my support and resistance. I noticed that this overlap worked better. Later, I found out that this is what traders call confluence. Two forms of evidence showing that this is a likely key level helps me with my trading psychology. And in this video, you will see how to plot the Fib as key levels within 3 seconds. A number of times my trade may be right, but because of the inconsistency in trade management, I get stopped out before I could protect my profits. Upon reviewing my trades, 20% of my trades did not go in my direction, and I got stopped out immediately. Another 20%, the trades hit my target profit. Other times, the trades went in my way before I got stopped out. This tells me I can actually do better. How so? I will explain more throughout this video. At the end of this video, you will learn how to use Fib retracements to find support and resistance and how to use it to manage your trades. Before I begin, a disclaimer that this video is solely for education purposes, not a buy or sell call. Before knowing how to use the Fib, let us dive into some history of Fibonacci retracements. Fibonacci was an Italian mathematician who lived in the 13th century. He is best known for his Fibonacci sequence. This slide shows the Fibonacci sequence. Each number follows a certain formula. For example, the number 13 is preceded by 8 and 5, which adds up to 13. One famous term associated with Fibonacci is known as the golden ratio. It is derived by dividing amongst the Fibonacci numbers. You can see that the number moves to 1.618 as the sequence gets larger. If you divide the other way, you get 0.618. This result convinces most people that somehow Fibonacci is weaved into the laws of nature and the markets. The Fibonacci sequence is often used in trading because it has proven to be a natural pattern found in many different places in the world, such as sunflowers, shells, etc. This insight resulted in men believing that because the Fibonacci golden ratio is something built into nature, and because the markets are traded by humans, we can see traces of Fibonacci in the stock market. Now let's move on to the application side of things. So traders use Fibonacci retracements to identify potential support and resistance levels. A Fibonacci retracement is a tool that measures the percentage of a move. For example, if a stock has moved up 100 points, a Fibonacci retracement of 50% would be a level at 50 points below the high. Traders believe that these levels are often areas where the market will find support or resistance. There is no guarantee that these tools will be successful, but they can be a helpful way to identify support and resistance levels. The first application is to see how to use the Fib retracement to find potential support and resistances. Here I am using S&P500 ETF as an example. I use the high and low of 2022 as my pivot points for drawing the Fib. This is the high of 2022. And this is the low. Drawing the high and low at the 2022, let us move into 2023. Notice how prices hover, get rejected, and find support at these key levels. See how the 38.2% retracement level from the bottom is playing a role in acting as a resistance before it broke through in May 2023. Let's do the same for 2021 and see how 2022 prices respond. So I draw the fib here, look for the 2021 low. And that's the 2021 high. And now we move into the the year of 2022. Because 2021 is in an uptrend, we draw from the low to high. In late January and early Feb, prices broke through 23.6% and the 38.2% retracement level, rebounded at the 50% level. Notice how prices went up, hovered around the 23.6 and the 38.2 level before continuing down. Most professional traders who trade with the trend will be shorting or getting ready to short in early Feb at the 23.6 level because the trend is already showing a lower high and lower low. Prices then went further down to 61.8% at this point of time. Even if you miss the opportunity to short, you should not be thinking of long positions because prices have already retraced more than 50% of 2021. This is our first application, how to draw fib retracements and how it is useful as a support and resistance tool. This is the second way I use the fib. We continue to use S&P 500 ETF as an example. Let's say we took the trade on 1st June because prices broke the resistance level since February 2023 and rebounded up. Prices moved up, and from 5th to 8th June, prices seem to be hovering sideways. Do you want to take profits or do you want to ride the trend? If you want to ride the trend further, how can you do so? By drawing the fib retracement from the swing low to the current swing high, you have a reference point to shift your stop loss. So 24 May low to the June 5th to 8th high. If this is a strong trend, prices should not retrace more than 50%. Hence, this tells us to manage our trades by shifting our stop losses to slightly below the 50% at about $419. With the shift of this stop loss, you are now profitable even if things go south. Otherwise, continue shifting your stop loss and achieve a good risk to reward ratio. This is how Fibonacci retracement helped me in trade management, and I believe it will help you too. In summary, this video tells you how to use fib retracement to find support and resistance levels and how to trade manage with fib retracements. If this video has been helpful, click on subscribe, click on the like button and share this video. Comment below for any technical analysis skills you want to learn. And thank you for the like and share, and see you in our next video.